All right, good morning. Well, at least it's not gapping above yesterday's high, which maybe some would like that after a little bit of a drubbing that happened yesterday, mostly on the gap down, which made continuing to go lower more difficult. To gapping down close to support kind of limited the downside, and now we'll see what happens from here. I decided to start with the futures here. And, we did a measurement as to percentage of the drop to different reference points. So we had about 5-6% to this gap fill and 7-8%. So here we are, right around that 7-8% level. The 7,300 level in the futures was going to be a significant point. So here's the stabilization day. And this is where the buyers have their chance to prove that they're still in control. As we look at this advance in the NQs, you see that the advance here was so strong that it never formed one of these PLs, pivot lows, which means there are no bars with 3 higher lows to the left and right, or in other words, to say that there's any correction of any significance on this time frame. It just continued to advance. The red bars were ignored, so on and so forth, until you got the wide range bar up, which was signaling, hey, this is now to the point of a short-term exhaustion. It did not by any means suggest this. And it's one thing that many, when you learn of the concept of a wide range bar ending, the thought of, okay, the trend is over and, get short. That's not true. It just says momentum is likely to slow down, and it did. And then we had this sideways chop, and it looked like maybe we could resolve itself to the upside while it was consolidating under this 7,900 level and maybe on its way to 8,000. And it certainly looked that way with this wide range bar and that dip there. That was an amazing rally day, but Mr. Schizophrenic, being as he is, had other plans in store for us to keep us on our toes and to be excited day to day in this market. Right? So for our entertainment and our increase in blood pressure, the markets gapped down significantly and took out the low of the wide range bar. And as we went down last week, incredibly, the buyers stepped up as if it was, Christmas again, 2018. And this wide range outside bottoming tail bar, which was a strong bar, or buyers stepping up on the dip, but hey, just a little bit too early. And then China comes out with some comments that, hey, who's going to blink first? And down the markets went. So here we are at support. And now we go back into our factory work as to what we're going to do here. So we've got a wide range bar in the futures. We'll look at the Qs because that's got a gap down. But at this point, we just say, okay, where's the halfway mark on the big bar? As long as it stays below here on a closing basis, that's bearish. Why? Well, as this is a wide range bar ending, well, so is this. This is a wide range bar ending. Now, if it's truly ending and the momentum is slowing down, and ideally it does go sideways. See how this went sideways before it went down? Well, we want this to go sideways before it might go up because it builds up a base. So you can see on the hourly time frame here, right, the move down, the swing high, major resistance prices have now rallied up to that resistance area. And as it consolidates here, now it's up to sellers to try and take control. And so the battle may go on here throughout the day, because a lot of times after a big wide range bar follows a narrow range bar or a consolidation day. At that point, can it get above the high, or does it go below the low? So after a few days, and we'll give or take, we'll see what happens here. We'll see whether we're ready to retrace, or is it ready for the next leg down to 7,000. Well, we need more information to come to that conclusion, but we will look at other markets to see if we can figure it out as time goes on and we see reactions in different markets. Let's take a look at the S&Ps. pretty much the same kind of a pattern, not as significant a drop, only about 5%. You can see the weekly charts, this amazing rally off of the V bottom after breaking all of this support, hardly any correction whatsoever, one down week and then reversing back up again, up into resistance. And technically, if we never knew that there was a country called China that existed, and we were looking at the charts, we'd be saying, this is a point in time where this market is likely to pull back. And that's what they're doing. They're pulling back within an uptrend and reaching an area of support. And now we'll just see how many buyers want to show up. So with all of my years of experience doing this, you always turn on the TV because we don't live in a cave, right? So we're interested in what's going on around the world, of course. But one of the things I've learned is to discount the news. So whether it's China, whether it's long-term capital management in 1998, where the financial meltdown was coming and the end of the world, look at the frickin' chart and see, is it near support? What is it telling you? Is it a gap reversal? Is there then a bullish reaction to bad news and so on? And then make your decision with your calculated stop of where your line in the sand is and see what the future brings, right? That's what we do as technical traders. The odds are on our side. Yes, news affects markets, and this administration where a lot of positive things are happening. Well, it's a new world in a sense where some patterns have become more erratic. So be it. That's the way it is. I like to say it is what it is. We deal with it, and we'll just see what unfolds here. But this move up, clearly a sign of strength. It's pulling back into an area where buyers should step up. Now we'll just wait to see. So the stabilization, should it occur here? Even if it dips down here, would be very okay. Actually, I would love it to see this dip down momentarily to take out some stops and flip right back up again, because that would build a base on the hourly time frame, and that could evolve into a turning point on the weekly time frame. Now, the Dow has been showing relative weakness, and you say, well, the Nasdaq's already down 7-8%, so relative weakness. Well, the Nasdaq could be down 7-8% and still not be as bad because it was stronger and went significantly higher, whereas the Dow made a smaller move. So now it's down at its support level reference point, and we'll say similar kind of pattern of a wide range bar stabilization. You see all the volume, but you can see on the weekly chart, it's already pulled back to the bottom of this support level. So this looks like the Dow is more likely to continue to underperform. Maybe it goes lower. We'll see. It's on the support level. Like I said, we're going to have to see what all of these markets do. But I'll tell you, you need to respect the drop, the vertical drop into this support here. And let's let this consolidate a little bit before we get aggressive on the long side or on the short side at this point to see what's going to happen over the next few days. Right now, all we have is some minor stabilization at the bottom of a wide range bar. Not a big deal to negate this drop. Bonds are flat here this morning as they come up to the area of this prior high. Normal buyers begin to back off the closer you get to a resistance area, but this is moved up. So interest rates are moving down. This whole China thing with the slowing economy, it all makes sense, for interest rates to be moving lower. This is the 30-year, which is coming down to support here. Good if you want to refinance your house, get a mortgage, go borrow some money. But if you're concerned about, the economy slowing, and if you're borrowing money for a business and you think your business might slow down, you might be hesitant to do that. So there's a balancing act. Do you want to borrow the money to live in a home, or you want to borrow money to buy, a fleet of cars or, a room full of computers, so you might be hesitant to do that. So, with this kind of news going on. So we'll see. That's why we keep an eye on these intermarket relationships right now. With interest rates coming down like that, it's in alignment with what's happening in the news. So maybe that's what is dragging oil down a little bit. Oil had a bad day yesterday. It really hasn't broken this trend, but we'll see if it can continue to hold here. Now we've got a bottoming tail bar. Now we've got a topping tail bar there. So you've got opposing forces. Trend is up, resistance there. Probably best to stay away from this section right here for the moment. Gold had a big day yesterday, I guess, in reaction to the markets falling off, and we'll see if this holds up here. But obviously a good day to move off of this low. Still possibly lower highs as it comes up into this area. We'll see what that does there. And just looking at these ETFs without the 24-hour, and you can see the size of the gap. When you get gaps below a big bar like this, and while it's a bottoming tail bar, that's pretty bearish. And historically, you don't get more of a move that day because the gap is so excessive. This was about a 2% gap down. And not only that, it's gapping down into an area of support. So short sellers aren't going to be so anxious to continue to press the pedal there until things begin to stabilize and there's more evidence that prices can actually go lower. So we'll see. Same story. What kind of stabilization? But, just as a side note, 10% down is in the middle of nothing. So when you start hearing comments about, maybe a 10% correction, well, there's nothing to the left here to stop it. So if prices were to start to fall here, and this gap area is nothing of support, this is your major support area. So what should happen here? The bullish scenario is it holds here over a few days, it rallies and goes right back up to the high. A more middle of the road scenario is it holds here, it rallies back up, and this whole China thing, as we're listening to the news, it's not coming, where they're backing off and it forms a head and shoulders top. And then you then get a move down, right, which would be probably about the same. I'm thinking, if you get, you measure that down, but it's in the middle of nowhere there. So at that point, who knows what the downside is, but it's probably further than what this is. So we'll see if that goes. And the more bearish scenario would be, it chops here for a couple of days and then down we go. So we'll see. Today is Tuesday. Maybe by the end of the week, I think we'll have some pretty good information as to where things will be going. Spiders, same thing. The 200 MA, I would say, is calling, but if that's going to continue to drop down toward the 200, I don't think it's going to do it alone. So we'll be keeping an eye on that. Same uptrend here. Some pretty decent support down in this area here, the 280-ish. And look, when we look at whole numbers and we look at areas of support, the key word is areas. Right? Don't get hung up on, it's that number. And if it goes below that number, it's going to be so terrible. Believe me, it can come down below that number and a little more. And that's what markets do. They jiggle around and, when we'll just to be able to figure out what the timing is and what the turn is by looking at multiple time frames. And these three will work real well for swing trading. Qs, right? Same story. Just here we can see the gaps that have occurred, and it's going to be out the same thing. And I'm giving you reference points as to Qs if you don't have futures, right? So that 178, 177 area on the Qs is where you want to see prices hold here, at least in the short term. You can see they're up here a little bit, but then a downtrend, and sellers starting to take hold here a little bit at the open. The Russell, which was just looking just terrific, honestly. We were talking about this yesterday at the end of the day in the green room, going through you know, how this looked with this bottoming pattern and this breakout. It just looked great. And then Mr. Schizo, right, big gap down and closed positive that day. So the buyers weren't throwing in the towel. And then it just became clearer and clearer. So much yesterday that, those sellers just give it up. And I like to say sometimes prices go down because they don't go up. Right. So breakout failures, prices tried to go up and they didn't. So the whole trade unfolds. This was created by buyers, and now those buyers are holding losses and they sell. It drives prices down. Where do they want to buy? Well, probably down here. So if the Russell was to get down here, we begin to reverse our analysis and we wait to see if the hourly begins to base out down there and the trend begins to change. And then we decide if we want to take a position. Transports, they got clocked yesterday as well, right? Everything was beaten up yesterday. Mid cap, that looks like it's going to go down. And even aerospace and defense, right, which was looking like it could save the day over the weekend, where it did not pull back like everything else, but that gap down was just too much yesterday and it gapped lower. So this one I want to see if it can recover. Since it was showing relative strength, can this recover from this gap down? And that would be one sign of bullishness within this market, that what was showing strength can come back. And just to look at a couple of what has been doing well, right? You see that semiconductors, which were the leader, right, getting beat up, but hourly uptrend. They need to hold this area. So this is the factory work. Yeah, damaged. This normal pullback. This is where it needs to see some buyers show up. And this is early in the week. It's going to
wait, Greg, you said hourly uptrend. You meant weekly uptrend.
Yeah, thank you, Dan. Weekly uptrend, hourly downtrend. And software, which has been a leader. Same story, a little bit more bearish with the breakout failure right there. So creating uncertainty, but pulling back. Here's the support. So the analysis continues to be the same. We go to technology, right? Same story. So the stories are similar in many places where the leaders were, and energy just failed miserably, where it looked like it could go higher. It didn't. And retailing, which looked like maybe it could bring up the rear, right? I was looking at the weekly chart a couple of weeks ago. Well, that didn't happen, and that looks like it could go lower. So there's a lot of uncertainty at this point. It's going to take time when you see big range bars like this. Wait for some smaller range bars and the volatility to contract before committing in a big way. As far as day trading, no problem. Every day we could do that. So with that being said, I hand it over to Dan. Tim was looking at the Bitcoin, which has been flying lately.
Yeah, no kidding. We had that as a core trade. All right, let's do opens real quick. I just saw this one, JMIA. Beautiful close yesterday. There's a tier 1 setup for us. And you know what? This could be a core trade. Just like, I did that 10 bagger chart of the week. This is a retest of an IPO. This could be the all-time bottom right now. Greg, this was the one I asked you over the weekend. We could have sold the $15 puts for something crazy like 70 cents. But, we decided we didn't want to hold over earnings. All right, opens. We have the call spread component of Adobe. And I tightened the stop over this little pivot. So let's give it a 5-minute high. That was one of the failed patterns. We got hit on some of these gappers. That's just a fact of trading. And we did this, even with the market falling yesterday, we sold a put spread on this little recent IPO, BYND. It was showing great strength. and now it's gapping up. Looks great. We can tighten the stop today. Those were the only two trades in the weekly options trader, and I posted pre-market a Halliburton put spread. I put them actually in both letters. The one that expires Friday, I did it in the weekly, of course, and then I did one for next week for the swing letter. Opens now in the swing and options letter. We have the Goldman Sachs call spread for next week. Maxer was one of the little 10-bagger trades that I mentioned in the video, so we're long stock. Curliff actually triggered at the high yesterday. This is a marijuana stock, so we're long that. Mitch, we legged into a covered call, and I tightened the stop yesterday just because of the market being weak to lock in a gain. TMUS, we legged into a covered call. We'll just let that play out. And BA, also, we are long stock on Friday's breakout. We were trying to leg into a cover call yesterday, but it didn't make sense with the spread and the strike and all that. So
And did you check the meatless one? Yeah, I know you made comment on that yesterday.
Yeah, that's what I just said here. We got a put spread for Friday.
Okay, cool.
And the weekly options trader, it looks great. And I was saying, you know, the thing was relative strength, totally on its own page yesterday, not caring about the market sell-off. And that's the exception of when we, on our trade checklist, why that we want to trade with the market and sector, you know, as part of our checklist. The only exception is when something is quote unquote on its own page. And just very simply, that means it don't care what anyone else is doing. It's on its, hey, trader, you used to be in the church choir, right? Trader McGraw. And so do you remember when you got in trouble when the instructor was saying, hey, Trader McGraw, quit singing on your own hymn sheet? That's the same thing. You don't care what everyone else is doing. You're there singing your favorite song. Boeing, it's not earnings. You never control. All right, that's a nasty pattern. You know, that I wasn't watching it the next day, but that was your no-brainer entry, both for a directional and a call spread. Right there. You know, it was in the news again today. I have it on my other sheet. But things like that, I'm going to watch every day. TME had earnings. That's a bearish pre-market consolidation. 14. It's a big gap, but still looks lower. It's not a tier 1 though. Satish, if this were gapping, oh, well, it is. I was going to say these are little bars. I was going to say if it was gapping over $6, and it is. It's 605. That's a day trade long idea. Halliburton, what were you asking me? How new trades to put on now? Yeah, trader, you don't get our Telegram text? Alex, yes, I do. Here, look at this one. This is my tier 1 setup right now. You know what? I'm giving this, I know the word's not kamikaze because we talked about that. It's 10 bagger. Well, this one's not a 10 bagger setup, but it's just a core entry. Let me post it here. But that's, let me just send it out to our Telegram folks. But yeah, trader, oh, you didn't check? Okay. Yeah, you need to check those things. It's very valuable. I mean, the only problem, you know what? The only problem is you gotta have a $7 stop. So you know what might be better? Using selling options. So for those of you who have your Telegram open and the swinging options trader, that's what you'll see right now. TTWO, popping here pre-market, but no pattern. Yeah, things are very, very sloppy. This is Ralph Lauren is total junk. Stone. There you go. There's a little, that's a no-brainer put trade over 5, 10, 15-minute high. I'm assuming that's earnings. If somebody, let me check real quick. Yeah, well, it says next one 812. Okay. Yeah, so it's all this is going to be nice support. But JMIA, I like that one. Let's look to sell puts on it. But I also sent out as a you know, a watch here to our weekly options trader. Not even going to Friday. I don't have confidence in a 3-day trade in this. This is nasty. But I like this morning's gap right here from this 15-minute retest, gapping over this pivot. And so I took a picture of this and I said, we're going to watch it for you as a possible put spread for tomorrow. I have no confidence of holding something to Friday. In the spiders, that is. A couple that are still on my watch list that I did not cancel yet. UNH put spread over last week's, well, actually last Friday's high. SPWR is a 10 bagger. I hope it just goes sideways more. Then we can have a tighter stop. November Sierra, same. I like the monthly retest. I put that in the Facebook group. Triple M was an invalid Climo. I'd much rather get a retest pattern on this though. It's still ugly selling going on. KMB was a long watch over yesterday's high. I like that. Yesterday's high looks great. That's bullish consolidation at the rising 20. Hey, look at our little maxer at the high. All right, Adobe. Yeah, 5-minute high. We'll go ahead and stop out of that call spread. Whiskey was a 10 bagger. And I said, even with this bottoming tail here, and when I did the video, I said, you know what, give it like an arbitrary 30 or 40 cents under this tail. And that's exactly where it held. So the trade is still valid for me if it triggers this 1, 2, 3. Oh, okay, Jay, don't forget my tier 1s. Here's JMIA. All right, the $20, wow, the $20 puts for Friday are still juicy. For some reason, I'm not popped. I got a 21 strike, but it says NA, so never mind. I'm not going to even worry about them. The 22.5s are spready, 55 by 95. If it takes out a 5-minute high, there's nothing wrong with just popping the 20s. 30-cent bid, or you can do a 2015. Because of the midpoint also shows 30 cents. Oh, and now it just dropped to 10. So maybe I was looking at stale data. Yeah, I think I was. Well, because of 20s. Well, let's just let it looks great though. God, I wish these weren't so spready. Well, the 25s have tightened up. 80 by 105. Yeah, 25 by 20. Yeah, let's do 25 by 20 right now. Is 75 cents for Friday. I'm giving that to the weekly options traders.